Welcome to the Wade Borth Podcast, where fresh thinking meets financial freedom. Each week, we explore ideas that challenge old habits and light the way to a stronger financial future. Let's get started.
Hello, welcome back to the Wade Borth Podcast. Today, I want to share a special best of 2025 episode. We've pulled together some of the strongest conversations of the year, insights on building your own banking system, understanding the safety of life insurance companies, and an inspiring IBC journey from a real client. These highlights capture the heart of what we teach at Sage Wealth. I hope you enjoy this collection and take away something meaningful for your financial future. And we'll talk to you soon. So thank you so much.
Some people, a lot of people, unless they've done a lot of research, and maybe you've done your research, you know what infinite banking is, but I just want to reframe the conversation just a little bit, just to help you gather a little bit more understanding to this idea of what's called infinite banking. So we like to call it, the stages of whole life insurance. And the reason why we like to use that is because I think that's a little bit more understandable. And it's, we commonly use the idea of, do you want ice cream or do you want the molecular makeup of ice cream? It's the same thing, but nobody understands the molecular makeup of ice cream. So today, again, we've touched on this before, but we're going to go back through this one more time again, just to bring some clarity to this idea. So we see this as, what we call the four stages. And what's really interesting is, I've known this for a lot of years, and it was one of those things that kind of eluded me, as I knew that there had to be a better way to describe this. And so we're going to dig in a little bit deeper into the idea of infinite banking and the four stages of whole life. So let's get started. And again, just to give credit to where this came from, a friend of ours, Nate Scott, shared this idea with me on his podcast, and this was so enlightening. And, we always, this is how I interpret it. This is that message that he shared with me and how I see it. And so we bring this back to the screen here. But this idea of there's multiple ways to start looking at what we call infinite banking. And quite frankly, most people that are truly doing infinite banking is a very small subset of the population. And it sometimes takes a while to get there. So if you read Nelson Nash's book, Becoming Your Own Banker, in the book, he spends the first third of the book just talking about human nature. And we have to get really good at controlling our spending and saving dollars so we can build up this pool of capital. And that's where this idea of the saver comes into place. Right? So we have to be that person first. We have to become, because again, the most important part about Nelson's book is becoming. Who do we have to become in order to take control of this function in our lives, this idea of finances in our lives? It's this idea that we have to control our spending, we have to save more dollars. And so if you have questions around that, we have a whole process. We have workbooks, we have worksheets to help you say, am I saving? Can I save? Am I saving enough? Am I getting the right return? And am I saving in the right environment? So those are things that we ask question about. And really the follow-up question is, do you want to know for sure? So there's a lot of things. I think I'm saving enough. Maybe I'm saving enough. Am I saving in the right environment? Am I getting the right rate of return that I deserve in that asset? And am I getting all the benefits I need and I want with that asset? And if you don't know for sure, give me a call. Let's have a conversation around, does this make sense for you? So let's start with the idea of saver. We believe, in fact, the conversation that we have all the time is this fits 100% of the population that's out there. And just by saving, you're going to take a little bit more control of your life. Because what happens, right? We hear this all the time. People have financial pressure. And that financial pressure, that uncertainty, the reason why you don't sleep at night is because you have a lot of assets. We talked to a lot of real estate people, a lot of assets, but there's very little certainty in their lives because they have no cash. So they're asset rich, cash poor. How many people have ever heard that before, right? So this idea of, are we saving enough? And if you're not saving enough, you don't have enough cash. It's causing this financial pressure because one little event in the economy could spell disaster. So this is where this foundational conversation comes into play, right? We want to educate you, bring some awareness to that thing that's keeping you up at night, that's creating that financial pressure in your life. And then let's empower you to develop a saving strategy. I think that's the real key. What is it that you can do and what's your strategy? Let's put together some thoughtful considerate ideas and processes in place for you to say, I can do this, I'm going to have some awareness, and I'm going to take control of my saving and my saving strategy. So that's the very first step. The wealth builder is truly that person that wants a little bit more control. He's got a little bit of debt. Now he wants to start controlling that debt, because you have to realize that debt is the thing. It's either you controlling debt or somebody else's debt is controlling you. I've heard this said in a lot of other podcasts, a lot of other conversations that, we're enslaved to debt. But it's, to me, it's more of a choice, right? We have a choice. Are we going to be, controlled by that debt that's somebody else, that we have indebted to somebody else? Or if we're going to have debt, and I think the reality is we're always going to have debt. The question is, how much of that do we want to control? And we've talked in previous podcasts, too, about this idea of a closed financial ecosystem. And that's kind of where the more you go down this pathway, the more you close this financial ecosystems in your life. So we want to start redirecting some cash flow back into our policies, have some, criteria around debt. Maybe we need to have some debt outside of us in the short term. And, what's the plan to say, hey, we're going to leave some of it there. We're going to start taking some more in-house, take control of that versus it controlling you. And then once you start doing that, then this idea of, okay, how do we do wealth acceleration or investment strategies, right? This wealth acceleration is a whole different conversation because it's not a saving strategy. Because that's where you can say, hey, I'm going to start buying some real estate. But you have to have the right sequence. And really, everything should flow through savings. And nothing really happens from a wealth acceleration standpoint until it flows through savings or the investment strategy. So you have to have a really good balance, right? You need to have a lot of cash on hand to take advantage of opportunities or protect yourself from chaos. And I've said this many times, like the only difference between chaos and opportunities when it comes to finances is typically who has the cash, right? Who has the money? That's typically what that is. So this idea of like, we got to have a safe, secure place to store our money that's not going to be correlated to the market whatsoever. That's the first step. And then when opportunities come, how do we deploy those dollars? So that's really why you want to have a wealth builder conversation. But again, this is all foundational. These mutual insurance companies, really a whole life policy is just a professionally managed bond and real estate portfolio that's done at this institutional level. Now, we've done podcasts talking about this, but just think about that. They're doing this at an institutional level. So they're finding deals that you and I as individuals are never going to find, no matter how big an individual we are. We're just not, unless you're a Warren Buffett, but really he's at institutional level as well with Berkshire Hathaway. But the point being is that they're doing this at an institutional level, and they're professionally managed money managers, bond managers, right, real estate managers. That's all they do. It's not a side gig for them. It's not something that they do, but they're doing it at a professional level. So, and then the beauty of having a whole life policy is it's guaranteed never to go backwards. So these guys are managing all the risk, and they're taking on all the risk. So you can have that asset, that whole life asset, that liquidity contract called whole life. And what you do with it is really up to you, and you can have conversation around, but just understand the safety of this. And so, and I also have heard like, well, what if, something happens where hyperinflation or the reserve currency is not the US dollar, everything's transacted in US dollars right now for the world reserve currency. And I was thinking about that. I was like, well, why is that such a big concern? Is it the smallest thing that's probably never going to happen? Because again, you have to understand these companies are managing for the probability of a certainty of a death, right? That's where they start. There's 100% certainty that we're all going to die. So they're managing it from that standpoint. And so now you take it to the other end of the spectrum. Is like, do they manage to the 0.5% or 1% that something might happen? They're probably aware of it. It's probably on their radar, but I don't know that you manage to that. And so I think we have to put it in perspective and also understand that if things are changing in the economy, they're also going to change. Right? Their obligation is to provide value to their policyholders. And if they have to make a change, if they have to say, hey, the world reserve currency is changing or whatever it might be, they're going to make changes as needed to bring the value. They're not going to say, well, we're going to do it in US dollars. And if the US dollar is no longer here, tough luck, you're out of business. Right? They're going to transition. And just a really good example of this, I don't know if anybody's ever heard of Lloyd's of London, right? Lloyd's of London, I believe, if I remember the story right, it's an insurance company that was started in 1680, I believe, 1680, 1670, something like that, just to insure ships going back and forth. And so they would underwrite the probability that these ships would sink and they would lose their cargo, and so they would all pool together. This is what insurance is, right? And at that time, England was the world power. It was the top dog back in the late 1600s, early 1700s. There was Spain and some other companies, France at the time, I believe, but they still were the primary power that was out there. And so everything was done through the British pound, right? That's how everything was transacted. And now that's no longer the case. After World War II, the British pound doesn't have the authority that it used to. It's the US dollar. But Lloyd's of London is still transacting. Again, I have a disability policy with Lloyd's of London. And, if I get disabled, they'll pay me in US dollars. Or if I was in England, they would pay me in the British pound, right? So they have the ability to transact to wherever they need to, and they have the ability to shift as they need to as well. So I hear this like, well, what if this changes? What if this changes? Well, I'm sure it's not happening. I'm sure these companies are unaware that these things are happening, and it's probably a thought in their head. And I know they think about these things. We've asked them in the past, what are you doing? He said, well, we manage for the bigger probabilities, but we're also aware of some of the things that might happen. But if you manage to all those things that might happen that never do, then you kind of get lost and you lose your focus. And I really believe that you lose what you're supposed to be doing. So I think, and again, I know just because I talk to these individuals, they're aware of all these things that are going on, but how much credence do they give it? Maybe when it becomes a hotter issue, bigger item, they will, but just understand they're going to be pivotal as well. They can move when they need to move. And again, I use the Lloyd's of London. They were doing what they were doing back in the day when the British pound was like the top dog. It was a world reserve currency. And when that changed, they didn't go out of business. They just started transacting in US dollars, or again, whatever country that you were in. So again, the problem is that we don't have enough money saved in a proper environment, and we're forced to go use the banks. And again, the bank doesn't care which one you are, if you're the saver or the borrower. They make money both ways. Understand that. They make lots of money both ways. The true wealth creator, because this is the third one I mentioned, the true wealth creator owns both sides of that function. And in the sense, there's probably even a fourth one out there that we don't talk about a lot. And again, you can find this content. There's a lot of content in our podcast and our blogs and some of the material that we have online. If you want to see it, I can also get it to you. So send me a message, wade@sagewealthstrategy.com. I'll send you this. But the true wealth creator actually turns into a legacy maker as well. Because the idea of what does a legacy look like? Legacy is having more money really than you know what to do with and you can spend, and you want to pass that to the next generation. And so what I mean by that is when you start this thing flowing and it starts growing, what's going to happen is that it's going to create enough cash flow and enough of a pool of money that you're going to start saying, hey, I can't find places to finance this more than myself, so I'm going to go outside. I'm going to go find other people. We start doing hard money lending. We start doing other things that allow us to truly grow wealth. Because somebody else didn't have the money or the discipline or the time frame, the proper time frame, now they're coming to you to borrow money. This is done all the time because they don't understand what the problem is. You've got to control. Now you have an understanding what the problem is, and you've taken control of that problem. And that problem is just a pool of money that you need access to when you want it to be able to make loans. Serves yourself probably first, but after a while, you find other customers. And you're going to start to find a lot of other customers once you've taken control, once you've proven that it works. And you put it on the street that, hey, I got money to lend. We've all heard stories. Hey, I'm doing flips or I'm doing real estate and I got the money guy that's backing me to do this. Well, why don't you become the money guy is the question. Money at work is a whole lot easier on your back than you at work. Think about that for a second. Just imagine. You either got your ability to go out and I listened to the Joe Rogan podcast, and he was talking about one summer where he was working, I think it was like the Knights of Columbus, building this ramp for wheelchair access. He says it was a great project, but he says all summer long I worked on this. I hauled concrete bags and lumber, and he says that was hard work. And he says I figured I want my mind and my money to work for me more than I wanted my back to work for me. And that's when you can get money to work. When you get your money to start working for you, that's true power and that's true legacy. I mean, you can teach people to do, that's legacy. Teach your kids to do, that's legacy. Teach everyone around you, that's legacy. So again, when somebody says, "Hey, Wade, hey, what does Wade Borth do for you? Why are you working with him? What does he do for you?" Well, he teaches me these things. He's empowered me. Again, I don't want to be the gatekeeper. I don't want somebody who says, "Wade's taking care of my stuff." Nope, I want to empower you to take care of your stuff. But how powerful is that? If you got some in your life right now and you said, "Man, I wish they were in my camp. I wish they were part of my community. I would love to be able to have a conversation with them," send me a message. I'd love to be able to talk to those people. Educate them. Help them understand what the problem is. And understanding what the problem is that we just don't have enough money stored up in a place where we can get access to it that continues to work and compound for us the rest of our lives. That's the real benefit. And then whatever we use it for, well, there can be a whole other discussion. And we've had other people on here that do a lot of different things. I don't endorse any of them. I'm not saying they're good or bad. I'm like, this is just to help you grow your mind. Because the mind, once expanded, never goes back to the same place it was. Anyhow, think about this as you go through your day. What is the problem, and am I solving for that problem? And what is the problem in your life, right? So I just threw out some general things out there, but in all reality, that problem is everybody's problem. It's just one iteration of it or another, right? It's just one form of it or another. But it's the same problem. Everybody has the same problem. I don't have a big enough pool of money so I can access it when I want to. And when I do, I'm obligated to Wells Fargo. Well, get out of that cycle. Get obligated to yourself. Get obligated to your family. Think about putting this together for a family banking situation. And that's true legacy when you can grow your family. Bring your family out of that poverty. Poverty of knowledge, right, that the problem causes. Just because somebody has money doesn't mean they're not in poverty. Because they're one generation away, right? We want to bring the whole family out. And that goes through education. And that goes through having an understanding of the process. And then having the discipline to make all that happen. Anyhow, love to hear from you. If you got comments about this, if you want to tell me I'm full of it, love to hear about it. Because I honestly know this is true. I don't believe it. I just know it's true. If people can understand what the problem is, then the rest of what I would consider the 4 steps of IBC, the process, really become irrelevant. Because once you understand and you say, okay, we're going to solve for the problem, then it becomes very clear what you have to do next. If people know what's going on, they're going to know what to do. Step 1, addressing and understanding and addressing the problem, getting real clear on what that is and where you want to go. That's step number 1. Thank you so much for your time.
Thanks for joining me today. Remember, small shifts lead to lasting change. Keep thinking differently, keep moving forward, and we'll see you next time.